Welcome back to the channel, everyone. In today's deep dive session, we're going to take your trading knowledge to the next level. In our previous video, we broke down the core concepts of fair value gaps, covering both the bullish and the bearish scenarios in detail. If you haven't had a chance to watch that video yet, I strongly suggest you pause here, go back, and watch it. It will help you build the solid foundation you need for what we are about to discuss today. Today we are diving deep into a very powerful and essential concept called the inversion fair value gap, or simply the IFVG. Don't worry if it sounds complex at first. The logic behind it is actually quite simple once you see it in action. Let's start by looking at this bullish example I've drawn here on the screen. Initially, we identify this specific area as a standard, natural fair value gap. In a typical market environment, we would expect the price to respect this zone, find support, and then bounce higher. However, pay close attention to what happens here. Instead of respecting the level, the price pushes right through it with strong bearish momentum, completely failing to hold as support. Once the price action closes firmly below this gap, it is no longer a regular FVG, it has officially inverted. This zone has now flipped its role and will start acting as a strong resistance level for any future price movement. We patiently wait for the price to return and retest this exact same area from below. As you can clearly see in this drawing, the price taps perfectly into the inversion FVG and then continues its move downward to sweep the remaining liquidity. This is the classic way a bullish FVG transforms into a high probability bearish inversion setup. Now let's shift our focus and look at the opposite scenario with a bearish example. Here we have a standard bearish FVG where we would typically look for selling opportunities. But in this specific case, the price completely ignores the resistance, breaks aggressively above it, and fails to respect the zone. At this exact moment, the bearish FVG becomes an inversion FVG. We now look for the price to pull back, find new support within this flipped zone, and then continue its strong upward expansion. It's all about understanding how the market shifts its bias and begins using these failed gaps as new launch pads for the next big move. Now that you have a solid grasp of the theory behind these drawings, let's move on to the real charts to see some live market examples and how they play out in real time. Now let's transition from theory to reality. I will show you several live examples here on the charts, one by one, so you can see exactly how the inversion FVG looks in a live market environment. If you are a beginner in the ICT mentorship, remember this. The concept is simple, but the mastery comes from practice. Don't just watch these tutorials like you're watching a movie. Trading is a skill of observation. You must open your charts, find these setups yourself, and study how price reacts. If you don't apply what you learn, you will forget it within days. So take a close look at these examples appearing on the screen right now and study the price action carefully. By the way, it's important to understand that this current course is just level 1. My goal here is to explain each tool separately so you can build a strong foundation. In the next video, we will discuss the BPR, or balanced price range, which is another advanced type of fair value gap. After that, we will move on to different types of order blocks. As you watch me drawing these examples on the chart, notice how the market respects these flip zones. Later in the series, I will launch more advanced courses to show you how to filter these tools and combine them to create high probability setups. We want to find the A+ setups, not just every gap on the chart. Keep looking at the charts. Notice the displacement when the price breaks the gap and the precision of the retest. This is the language of the algorithms. Again, I highly recommend that after finishing this video, you immediately go to your trading view and try to find at least 10 IFVG examples on different time frames. And if you haven't seen the previous video about the standard fair value gaps, please go back and watch it. It is the core of everything we are discussing today. Understanding the basic FVG is mandatory before you can master the inversion. Stay focused on these live examples, observe the candle closes, and see how the IFVG acts as a magnet for price before the next expansion. All right, let's look at a few final examples before we wrap up. Notice how price approaches the zone and treats it with high precision. This is exactly what you need to look for. I want you to practice this on your charts multiple times until it becomes second nature. Observe how, after the retest, the price moves aggressively to sweep the liquidity on the other side. By the way, I will be dedicated several upcoming videos to explain liquidity in depth, as it's the fuel that moves the market. Speaking of professional trading, many of you asked me about the best broker to use. For a reliable, regulated broker with incredibly low spreads and instant deposits and withdrawals, meaning you don't have to wait days to get your money, I highly recommend Exness. It is my top choice for a smooth trading experience. You can find the registration link in the description below this video. Finally, if you found this breakdown helpful, don't forget to subscribe to the channel and turn on the notification bell. This way, you'll be the first to know when the next part of this course drops. Smash that like button if you enjoy the content, and I'll see you in the next session. Happy practicing!